Hello guys, it's Max here from Daily Market Movements, and in front of me is the gold markets. But just before I get towards the gold markets, I just want to say a huge thank you to everyone who signed up over the weekend. We had a record number of Signal clients joining our team over the weekend. So once again, thank you and welcome to everyone who did sign up. And if maybe you've been watching our videos for some time and you're considering signing up, well then we'd love to have you on board, and we look forward to welcoming you on our fantastic team here at Daily Market Movements. But in front of me, as I mentioned, is the gold markets, and as you can see in today's trading session, it's been rather choppy actually. We did go and retest that 50-day EMA up at around 1870. That was just before the US markets opened. However, within the in the past hour or so, we've had a very swift pullback, and I just think it's just the hedge funds and the banks trimming their positions. The markets are starting to become a bit frothy now, especially the Nasdaq 100, the S&P 500, and the Dow Jones 30. So I think now we're kind of entering that profit-taking period, as it is now the earnings season. So you are going to see these swift pullbacks, and then of course you're going to have investors and retail traders come in and buy the dip, and that's why the markets have already nearly recovered from that swift pullback, and that's exactly what dragged gold down in today's trading session. So we're currently trading at 1853. We're pretty much where we left off from last Friday, so no real major point to be spoken about here in the gold markets. But Monday is typically, we do see some counterflow in the gold markets towards the downside, but as we go into the Asian session on the Tuesday, so that will be this evening, of course, due to the time difference, we do usually see some nice buying pressure here on the gold market. So going into tomorrow's session, I want to see a retest of that 50-day EMA, which is currently at the 1870 area. If we can break above the 50-day EMA, as I mentioned, this is one of the last hurdles in our way, blocking us from going back towards all-time highs. So if we break above the 50-day EMA, as this black arrow shows you, we are then likely to go and retest these swing highs. That's what I've circled on this chart here, which is at that 1950 area. That's this green line here. So that would be my first take profit if we do get a daily close above the 50-day EMA. And then once we get a daily close above the 1950 area, we are then likely to go and target the $2,000 level, as it is a large psychological number. And if we break above 2,000, we then target the all-time highs, which we hit back at the beginning of August, which is currently 2,068 here in the gold markets. But fundamentally, gold is looking incredibly strong. We're in a low interest rate environment. COVID is still a massive threat, and the government and the Fed continue to inject the economy with massive $2 trillion stimulus packages. So I am very, very bullish here for the gold markets. Also, I want to highlight the fact the RSI, one of the best indicators out there, is also telling us that gold is still under 50, so we are nowhere near considered to be overbought. So there's plenty of territory towards the upside for a significant rally. So I'm a buyer here of the gold markets. I have no interest in selling as long as we're trading above a 200-day EMA. From a technical perspective, gold is looking very healthy. So 1870 is an area which I'm hoping we break above going into Tuesday session, and then hopefully from there we go back towards the swing highs up at 1950.